If you're interested in real estate investing, very, very basic breakdown, watch this video. Cash flow versus appreciation. Dun, dun, dun. Hey everybody, Jackie Hu, your local and international real estate expert with the Hu and Blue Real Estate Group. I make videos for buyers and sellers, giving them the tips and tricks to the real estate game, so tune in every Tuesday and Friday for more videos. As I said in my intro, today I'm going to be talking about cash flow versus appreciation when a newbie investor is trying to strategize and figure out how they should think about investing in real estate. This might just be applicable to California. I don't think it is, but I'm going to put that little caveat there. So when a investor is thinking about how they want to invest in real estate, they're thinking, do I want the property to cash flow or do I want the property to appreciate? Obviously you want both. You can't always get that. So if an investor decides, hey, I'm going to go with the option that cash flows, that means that after all of their expenses are paid, that means mortgage, utilities, property taxes, maintenance, fees to the property manager, they're making a certain dollar amount every single month. That amount might not be as much as you think it should be, but it could be anywhere from like $100 a month to, whatever amount. But let's just say about cash flowing about $300 a month. So after everything's paid, every month, $300 is getting transferred into your bank account. That's one strategy. The second strategy, on a very, very basic level, is appreciation. So if a investor comes to me and says, hey, I want to buy a property that's going to appreciate, we're going to go look at markets that are undervalued. And so the property might be, let's say, worth $600K. And based on things that are happening in that neighborhood or that area, we're pretty confident that it will appreciate long-term or in the next couple years. So that would be like the property we're buying at 600 and now after a couple years it's worth $1 million. You just made $400,000 worth of equity. So when investors come to talk to me, I ask them lots of questions, but when I get to, hey, what's more important to you, cash flow or appreciation, that really helps me determine what direction to point them in. I'm trying to keep this really basic, so I'm just going to give an example that's applicable to Southern California right now. If you were to come to me as a newbie investor and say, hey, Jackie, I'm thinking about investing in real estate, I would ask you cash flow, appreciation. 9 times out of 10, you're going to tell me cash flow because you don't maybe have enough money coming in from other places to cover the mortgage if the rent can't cover the mortgage. So in California, or at least in Southern California, I'd probably encourage you, depending on the area, to buy a multi-unit property. So that means that more than one unit is contributing rent to cover your mortgage. So if you have 2 units, that's 2 people paying rent. That's more likely going to increase the opportunity for your mortgage and expenses to be covered. If somebody comes to me and says, hey, I care more about appreciation, that's usually a more experienced investor who might be looking to just sink their money somewhere and doesn't mind if every month they might be losing money in terms of the mortgages and expenses not being covered, but they're very confident that, hey, the property is going to appreciate from 600 to $1 million. I'm now going to have 400K at least at my disposal, and I can take that money out when I'm ready and do something with it. So usually my newbie investors go the cash flow route, and then more experienced investors sometimes focus more on appreciation because they usually have money coming from their other properties or their income that they can cover the difference between the expenses and mortgage and the rental collected. So if you're thinking to yourself and thinking, hey, I'm really interested in investing in real estate and I want to buy a property and hold on to it, what does that look like? I really want you to be thinking, hey, what matters more to me? The property cash flowing, the property appreciating. One of the great things about California is that there are certain areas where both things can apply. You can have cash flow and you can have appreciation. And we just came out of a market where basically every single property appreciated in California. So there are opportunities for both, but usually you have to focus on one strategy in the beginning. There are also different states and different areas that are known for being more more focused on cash flow or better for cash flow, and some states that are known for being better for appreciation. California is thought to be one of those states that's better for appreciation. The properties usually continue to go up in value year over year, but because the property values are so high, it's very hard sometimes to get the rent to cover all the expenses and the mortgage. It can be done. As always, I'd love to talk to you about it. I really think real estate investing is very great. The more properties you own, yeah, sometimes it can be a lot of work, but the more usual passive income you have, and the more maneuverability you have, and the more tax write-offs you have, and the more you can let friends stay at your properties, or you can help people out by letting them stay at your properties. There's just so many options. I will stop now before I keep going and get ahead of myself, because I wanted to keep this basic. But if you guys have any questions, want to talk low-level investing strategies, high-level investing strategies, I'd love to talk with you. Please think of the Who in Blue Real Estate Group and hashtag Who's Your Realtor.